Simon White of Bloomberg Markets Live writes that the liquidity and tactical equity indicators do not yet indicate capitulation in U.S. equities. The market's trying to find a bottom, but we're not there yet. Liquidity is poor and continues to point to more equity volatility ahead, while tactical indicators are not yet at levels seen at previous bottoms. Market tops are a process, while market bottoms tend to be points in time. Tops can play out over many months, but bottoms are often sharp and sudden, and the rally afterwards can be as aggressive as the initial sell-off. Catching a market bottom can be very profitable if you get the right timing. That's why it pays to watch the signs. So, let's take a look. This first chart shows the advancing stocks versus the declining stocks. In other words, this chart shows the cumulative number of stocks on the New York Stock Exchange advancing minus those declining on a daily basis. The chart shows that the number has been falling, but it's not quite yet at a level associated with the late 2018 and 2020 lows. But remember, not all lows are equal, and we are getting very close. And this is a sentiment chart, which can be a contrarian indicator. And as Warren Buffett has said, be fearful when others are greedy, and greedy when others are fearful. And this chart here from the American Association of Individual Investors is the bull versus bear sentiment spread, and the spread has fallen and is approaching contrarian levels, but it may have a little bit more room to fall before the bottom is in. But as you can see, it's very close and consistent with 2016, 2019, not quite as low as 2020, but we're in the neighborhood. And in this last chart, we have the VXV versus the VIV ratio. And this is the ratio of long-term equity volatility to short-term equity volatility, or the 3-month versus the 1-month. And when the measure is high, it implies complacency in the market as long-term volatility is rising, but short-term volatility is relatively low. And as you can see, the VXV versus the VIV ratio has recently been falling, but is still not quite there yet, as some of the other charts. Additionally, the put-call ratios are also not at levels consistent with panic buying of downside protection. So be prepared for more volatility. With the stock market update this weekend, we'll go through the cycle of the monthly, weekly, and daily charts using our charts. And that should also give you an idea of where we are and what you should do with regard to your investments. And for today, that's ChewDog Charts. Thank you.